Hey everyone, welcome back to Corporate Decoder. Today, the Children's Place Incorporated just filed a current report on Form 8K, and I'm seeing a significant shift in their shareholder structure that signals a real power play. Quick note, this is not financial advice, just my take on public filings for educational purposes. The big story here is a massive stock transfer to a key executive, and what it might mean for the company's future direction. So, what is happening at the Children's Place Incorporated? Well, on the 11th of August 2026, their main investor, Mythic Capital SPC, which is the controlling shareholder, made a big move. They entered into an agreement to transfer a large chunk of stock, specifically 500,000 shares, to Mohammed Asif Seemab. Now, who is Mohammed Asif Seemab? He is not just any executive, he is the vice chairman of the company's board of directors and also the president and interim chief executive officer. This is a really substantial award of shares, but it comes with some strings attached. These are called restricted shares, meaning they are not fully his yet. These 500,000 shares will vest, meaning Mr. Seemab will officially own them. In 3 equal parts, each part is tied to the company's market capitalization, or its total value on the stock market. The first chunk vests when the market cap hits $265 million. The second when it reaches $400 million, and the final part when it hits $600 million. There is a crucial condition though. He has to continue working for the Children's Place. If he leaves before these market cap milestones are met, he could lose these shares. Also, any shares that have not vested by the 5th anniversary of this agreement will be forfeited. That means if the company does not hit those valuation targets within 5 years, Mythic Capital gets those shares back. Now this is where it gets interesting from a corporate governance perspective. Mythic Capital is the majority owner, holding about 61% of the company's stock according to recent news. And Mr. Seemab is also a director at Mythic Capital. This means the controlling shareholder is giving a significant stake to one of its own directors who also happens to be the interim CEO of the company they control. The company did review and approve this as a related person transaction, which is standard procedure, but it definitely highlights the close ties. Let's look at the company's stock. The Children's Place Incorporated's common stock is traded on the Nasdaq Global Select Market under the ticker symbol PLCE as of its last reporting. Its market capitalization was around $54 million, with the stock trading at about $2.44. This filing is essentially about changes in officers and executive compensation arrangements. The key event is this large stock transfer from Mythic to Mr. Seemab, which is being treated as a compensatory arrangement. The details of this agreement, the restricted stock transfer agreement, are filed as an exhibit. This is the formal document outlining the terms we just discussed. Now, the company also included a standard forward-looking statement section. This is where they talk about potential risks and uncertainties. They mention things like the risk of not achieving operating results sufficient to fund their operations and repay debt. They also point to risks related to trade policy and tariffs, changing consumer preferences, and the highly competitive nature of the apparel business. This mention of trade policy is particularly relevant. The Children's Place, like many apparel companies, likely sources a lot of its products internationally. Any changes in trade agreements or the imposition of tariffs can significantly increase costs or disrupt supply chains. This could directly impact their profitability and their ability to offer competitive prices to customers. They also acknowledge the risk that their strategies to boost sales and profits, improve how they operate, and even change the company culture might not work out as planned or could be delayed. This indicates that there is still a lot of uncertainty about the effectiveness of their turnaround efforts. And importantly, they explicitly mention the risks associated with having a controlling stockholder. This refers back to Mythic Capital's significant influence. While having a supportive majority owner can be beneficial, it can also lead to potential conflicts of interest or decisions that may not always align with the interest of minority shareholders if not managed carefully. Looking at the broader context, the Children's Place has been facing challenges. Recent headlines mention disappointing quarterly results and ongoing efforts for a business turnaround. Analysts at UBS have maintained a neutral stance, citing tariff pressures. The current market cap of around $54 million is significantly lower than the market capitalization target set for Mr. Seemab's stock vesting. This suggests that achieving those targets will require a substantial increase in the company's valuation. So, what does this all mean? This stock transfer is a massive incentive for Mr. Seemab to drive the company's market value significantly higher. Mythic Capital is clearly betting on his ability to turn the company around. However, the hurdles are high. The company needs to more than triple its current market cap to unlock the full stock award. This highlights the ambitious nature of the targets and the significant turnaround required. What I am actually looking for is whether these ambitious targets can be met without further diluting existing shareholders, and how Mr. Seemab's dual role as an executive at the company and a director at its controlling shareholder will play out in practice. The success of this plan hinges on significant operational and financial improvements. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord.